Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank by applying the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarah Ibrahim. With us today, I have an awesome guest. His name is Brandon Neely. He's a fellow Bank on Yourself professional, a profit first professional, an entrepreneur. He's the co-host of Wealth Wisdom Podcast, Wealth Wisdom Financial Podcast with his wife, Amanda Neely. Brandon, welcome to the show.
Hey, thanks for having me. It's fun to be here with you.
Yeah, and welcome back, actually, I should say, because you were on episode 7. You and Amanda Neely were on episode 7 talking about profit first and bank on yourself and how they go, what those subjects are and how they go together. So I'm glad to have you back. I want to kind of talk more about that today. I want to talk about a couple concepts. What are some recent things you're coming across that you want to share with us?
Yeah, in this world of craziness, I mean, I think about starting my business. If I were to have started our coffee shop now, man, there's so much uncertainty out there, so much craziness, right? I feel like, right now it's Ukraine. Last month was COVID. Now COVID's over. I apparently, and there's who knows what's going to come next. And a lot of people are kind of on edge, worrying about the next thing. And for us as business owners, we are on a knife's edge when we're a business owner. And so, like, how do you build wealth that can't be taken away regardless of what Russia does or what the CDC does? I want to make sure that I'm building stability, foundation, and that's what we've been really working on for years with our Wealth Wisdom Financial podcast, the Still Method, all that fun stuff.
A couple of things. So number one, what do you think will happen? Let's just say, for example, like this whole war that's going on, who knows how long it's going to last for? But in your opinion, what impact do you think it has on financial lives here in the US?
Yeah, I mean, that's a hard one. I'm no economist, but I mean, just thinking now recently, the gas prices are going up, right? And is that correlated to Russia or not? I mean, that's what I hear from the same news sources that other people hear it from. But I can see in our pocketbooks, gas prices are higher, right? And so I don't know what's coming. All I know is how am I a good steward with the things we're creating, regardless of what happens tomorrow.
Exactly. And then you mentioned, like, so what are the ways to do that, to have kind of this bulletproof financial plan, if you will, is through the still method. So what exactly is the still method?
Yeah, we love, and this has been a principle we've been doing for a long time, both me and my wife, as we run a business. And the STILL method is an acronym. We love acronyms. And what it is you can look it up at stillmethod.com, but set your sights is the S, right? If you don't have a goal or a plan or any kind of idea, most people in my as I've been working with a lot of people, they have ideas of what they want to do, but there's no strategy, there's no goal setting. And so setting your sights, have a goal, and then from that is the T, which is track your in and out, right? You have to actually, if you want a goal of being the best athlete, right? You got to go to the gym, you got to track the workouts, right? And then you have to, the next one is I, which is inspect your progress. Not just going to the gym, doing all the right stuff, but what are the things that you need to do to get better, right? And then from that, look for 1% adjustments. People want this big giant rate of return, right? But it's those little increments that are really huge. If you've done that over time, it becomes ginormous, right? So you look for 1% adjustments. That's why I love profit first. And then live deliberately. I think the reason that we are in a crazy world is people aren't deliberate with their finances. They have too many rocks, right? That it's too confusing and too many of this. I have this 401k, I have this over here, I have that over there. And there's no like plan or strategy with all of their money, right? Does that
Mhm.
make sense? Especially for business owners, we divest from our own business too often.
Exactly. Yeah. Like when I started my first business, I didn't really care about specific goals or specific things. I just wanted, I guess, in plain terms, a lot of money as soon as possible. And I didn't get that, obviously, because that's not a realistic goal. It doesn't really make
Mm-hmm.
sense. So I like how you're saying, like, you want to make it like specific, trackable, inspected, 1% adjustment, and then live deliverably. What I think, I guess, out of everything that you said, one of my favorite things, it might be counterintuitive, but it's the 1% adjustment. I think that's the most important one in my opinion, because
Mm-hmm.
so many, it's counterintuitive. A lot of people think that 1% of something is really nothing. But if you were to compare kind of like, this is my idea of how people are investing today. It's the difference between a speedboat and a cargo ship, right? A speedboat
Mm-hmm.
can go, what, I don't know, 100 miles per hour, but what good could that do for you? You can only go from coast, from one area to another area. Whereas a cargo ship takes, I don't know, 3 or 4 months to travel around the world, but it can carry so much more.
Yeah. Yeah.
It's the slower, definite progress that helps build strong financial plans. And we see this a lot with Bank on Yourself, right? It's not an astronomical rate of return. It's a very conservative rate of return, but that's not the point. The rate of return is not the point. It's the
Yeah.
it actually, it's, if you want to talk about rate of return, it's actually 3 or 4 times, but probably 40 times greater than a savings account. But again, it's not the rate of
Yeah.
return. It's it's what it could do for you, the protection and everything else afterwards. We have other episodes on Bank on Yourself. So what's how does somebody implement still? Like, what do they do?
Yeah, it's a practice, kind of like like a spiritual thing. So for me, you just write down certain questions, write down the acronym, or we have at stillmethod.com, we have a little cheat sheet that you can download, right? And you do this almost like anything, exercise, whatever, and you go through and you ask yourself these questions. What are my goals? And then it'll change, right? You now have a new son, right? And
Yes.
right,
Yeah.
probably a year ago, your goals were a little different than
Yeah.
they are now, and some of your reasons maybe change, and so those things change with time and with other responsibilities, opportunities. So having those questions and reflecting is really important, right? And so just going through that and doing the work, right?
Mhm.
I see too many business owners that say, well, I like my business, but I don't like money, or I don't like keeping up with all that stuff. And I'm like, well, unfortunately, make you want to make money and you want to keep money, right? And that's what I love again about the bank and yourself concept is how do I keep money? And it might seem like it's slow or whatever,
Mhm.
but you're your greatest asset. That's one piece. And then if you're a business owner, right? How can you use the cash value
Mhm.
to make more decisions, positive decisions that are going to give you a bigger rate of return rather than just putting in Amazon stock or whatever. Um, does that make sense?
Exactly. Yeah. That's so, Bank on Yourself has a lot of benefits, a lot of functions for different people, for different situations. Like, one of the things that like got me kind of hooked to Bank on Yourself and why I have 3 policies and my wife has 1 policy is because of the kind of the, not literally, but in a way, you're in a positive way locking up your money, right? You're putting
Yep.
it into this policy. It's still liquid, but it's not as liquid as a savings account. So it's not as spendable or reachable. It's still liquid. You can still access it, but there's just a few more obstacles to get to it. And in my opinion, that's a good thing. Like, I want
Yeah.
to
Yeah.
have some sort of strategy that could defer some decisions of spending money quickly, and kind of give you some more thinking. And this is why, like, part of the principles of like thinking like a bank is like, when you go to a bank and you borrow money, they don't just say, all right, how much do you need? There's an underwriting process, there's systems in place to make sure the investment or the loan decision is going to be right. And I think that we need to implement the same things. Like, we have like processes in our lives. Like, all right,
Yeah.
are we going to buy this? How much is it going to cost us now? How much is it going to cost us in the future? Where do we get it from? We do a policy loan. Okay, we pay it back at this time. And that helps us become better business people. And
Yeah.
this is like how you said, like for example, if you're a chef and you own a restaurant, you actually have two hats, like two big hats, right? One
Yep.
is the food and being a chef, and the other is the accounting, the finance, the taxes, bank on
Yeah.
yourself, profit first, all that other stuff. So that is just as important as, if not more important than the food and the art of what you do.
Yeah. And knowing like you could get like screwed over by an accountant or
Yeah.
tax person, right?
Yeah.
There's so much more. And then on top of that, as a business owner, and why I love working with business owners, um, think about marketing. You're not
Mhm.
just the chef, and I have a client that is a chef, and I'm
Yeah.
like, you got to figure out marketing. How do you
Yeah.
get people in? How do
Mhm.
you deal with taxes and all of that stuff? I heard the tax code is bigger than the Bible, right? So
Yeah.
that's confusing, right? And that leads into again, we love acronyms. So the still method is one, but there's the alternative, which is chaos, right? And that's what the world wants us to be in, and
Yeah.
that's what I feel like we are in. Is like, all right, this is crazy, right? And chaos uh, is confusing, right? So that's the C in chaos, right? And that's our tax code, and that's all this other stuff, right? And then it's haphazard. We'll have this rock over here. We'll have this over here. We'll
Mhm.
do this over here, and then we there's anxiety that is there. An emergency happens, or something happens in your business, and there's like anxiety that affects our family, our kids, right? Because our business isn't doing as well as we
Mhm.
like, or it shut down. And then it's overwhelming. Like, how do we understand, if you're a business owner, how do you deal with marketing? How do you deal with this? And so then we just say, all right, screw it. And then it's stressful, right? And that's all of it leads into that. And so that's chaos, right? And I've heard a marketer say, if you confuse, you lose.
Mhm.
And I feel like a lot of people are confused,
Mhm.
and that's why a lot of people are losing, right? And what I love about the bank and yourself concept, it's pretty simple,
Yeah.
right? And I can look and tell you from my plan,
Mhm.
if I do this, this is where it's going to be at age 70 or at age 50 or
Exactly.
whatever. And I love that. And then what oftentimes, this is what's interesting. People will talk about the cost of insurance in the beginning, right?
Yeah.
And that kind of confuses me, because they invest in their business and they don't pay themselves. And they're like, well, it's going to come back to me, and I will get a rate of return soon.
Mhm.
Eventually I'll get a rate of return. And we don't look at the cost of that business, right? There's a
Yeah.
cost associated with it. And usually in a healthy business, it still takes about three
Yeah.
to 5 years before it becomes profitable. There's a
Yes.
cost, right? We have to pay for licensing. We have to pay for various things,
Mhm.
right? And so this is where it gets like, where people are like, well, yeah, but I don't see a rate of return. I'm like, well, actually you can, because you have access to the cash, right? And maybe you use that for a business opportunity, or whatever. I don't know.
Yeah, yeah, exactly. Yeah. And to kind of provide a little bit more like context, like for people who aren't familiar with like the cost part of bank on yourself, like for example, and don't quote me on this, but it depends on the age, it depends on a lot of other aspects.
Mm-hmm.
But let's just say, for example, you're 40 years old and then you do a 10-year bank on yourself life insurance policy, and you're putting in $10,000 a year. Year one, maybe, again, don't quote me on these numbers, but year one might be like 6,000 in cash value, and then year two will be a little bit higher. And a lot of people are like, wait a minute. So you're telling me year one, if I give 10,000, then I only have access to 6,000? And the answer is yes, because there's a cost to insurance, but that's not the entire life of the policy. It's going to grow.
Yep. Yep.
Eventually, I would say by like year 5 or 6, the cash value is going to outpace what you're paying into it. And eventually you always have access to that money. And then think about the alternative. Let's just say, let's take bank on yourself out of the question. Let's just do a regular savings account, have our business. Then what, right? So answer that. So why not just skip bank on yourself and just do a normal
Yeah.
savings account?
Well, here's the thing: when you're a business owner, excuse me, we all want profitable businesses,
Yeah.
right? And what I love about, and I look at it more like a business model, right? It's a business model that we're buying, right? It's life insurance. But what I love to look at is this is a guaranteed profitable business model, and there's nothing you can do about it, just on the guarantees alone, right? And then there's the positives on the dividends and all that. So the business model in itself is profitable.
Yes.
So why wouldn't you? And the problem is, in our uncertain world, we don't know what's profitable and what's not, and we think it's going to be, and that's the risk, right? Have you watched? There's a commercial, I think, about cryptocurrency,
Yeah.
and there's a bunch of them now. But this one thing was like, oh, you're rich. Oh, you're not. Oh, you're rich. Oh, you're not.
Yeah.
And this guy is like depressed, left his job, then he comes back, and it was all about taxes or something. And I'm like, this is interesting. Because he thinks he's rich, but he doesn't know. And that's the problem. I don't know enough. And I think some people, like you had guests on here,
Yeah.
who are involved in crypto,
Yeah.
using your cash value,
Yeah.
and maybe using it and knowing that the business model is for sure going to be good, and using it when things you do understand, if you understand crypto, and maybe you can pull it out and make some money.
Yeah.
The reality is it could also change tomorrow. Like, I don't know. Like, does that make sense?
Yeah. Nobody knows. Even
Yeah.
even people who buy the most Bitcoin don't really know what's going to happen. And yeah, exactly. It's kind of like, in my opinion, why would you invest in something that you have no idea? Maybe it's to get the upside of something, but then it's like, to get the upside of it, then what? Let's just say, for example, I put $1,000 in Bitcoin today, and that $1,000 turns into 10,000. Then what? Do I sell? Do I hold?
Yeah.
What if I hold and it goes back down? So in other words, you need to kind of answer like, what if then? Like, if it goes up, then what? Like, have this kind of
No.
this plan. Because again, too, if you put $1,000 in Bitcoin today and it goes up to 10,000, you didn't really make any money until you actually sell. So whether it's going up to 10,000, 5,000, 20,000, it's kind of irrelevant until you actually take that out and put it back into cash, but then using Bitcoin as a currency, that's a whole nother, I guess, outside of the scope of this podcast, that's a whole nother story.
Yeah.
But let's talk about that. So sometimes when I talk to clients, a lot of times, like, they get it, right? They get Bank on Yourself. It makes clear sense. Like, all right, guaranteed growth and tax deferred growth. I guarantee to always be able, I can always access the money via loans and withdrawals. But why don't I just, put like $10,000 a year, for example, into an index fund following the S&P 500 over the next 20 years, and that'll equal $3.5 million, whatever that number is. Why not just do that? Even with the loss, I can still come out ahead.
Yeah, I think there's and I hear this all the time myself, right?
Yeah.
And there's a couple things that we don't know the future, right?
Yeah.
And if you do know the future, give me a call, let me know, because I'd like to know what you're doing so I could follow you. Right. But I love, again, about this this concept, or in general, we all know that we're going to die.
Yeah.
Right. That's what I love about the contract is I will be made, it will be fulfilled.
Yeah.
I might not see the results, and we have to begin with the end in mind, right? Whenever and this is something I learned in our business. How do I build a business that is sellable?
Yeah.
Right. And I might never sell the business, but what do I do at the end? What's my exit strategy before I even start the business? Right.
Yeah.
What's the exit strategy? And so how do I work backwards, reverse engineering? Right. And I'm not saying you don't do this or that, but reverse engineer our lives. Like, we don't know when we're going to have a stroke or cancer or anything else. And we might have the best intentions, and then COVID happens.
Yeah.
Or something else happens. God, who knows?
Yeah. Yeah.
God forbid anything. But that's why I think it's a wealth stabilizer, right? And so if you understand that, and you have that stabilization in place, and you understand your business, whether it's crypto, whether it's real estate, whether it's, I don't know, whatever it is, the banks are in the business of banking.
Yes.
They're the most profitable business in the world. They use other people's money and all of this.
Yeah.
We're all in the banking business.
Yeah.
Regardless. So how about I understand that, to then enhance my business, whether I'm a stock jockey, right? And I'm not saying you don't do that either. Like it's a both and, not an either or.
Yeah. So both, and like I could invest in real estate using my whole life insurance policy. I could invest in stocks using my whole life insurance policy. I could reinvest back into my business using my whole life insurance policy. So it's not either or. And I love that too, because that's something too I hear a lot is like, if you own a business, do you reinvest back into it and then like have it grow compound on
Yep.
itself? Or do you save that cash outside and then have cash build up for the future? What if we could do both, right?
Yeah.
What if we
Well, and
could, yeah,
I do think in our world, we're all on the risk side of things,
yeah,
and we are paying the consequences
yeah,
for it. And the Fed will raise interest rates because they
mhm,
need to,
yes,
and we needed some state safety and stability.
mhm,
And this is the thing. The definition of insanity is doing the same thing and expecting different results. We've seen how this plays out already.
mhm,
We all kind of have a feeling that something is amiss, right? And I think about this with the CARES Act, when they
yeah,
gave us $100,000 that we could access from our 401k,
yeah,
right? Because we weren't prepared for an emergency like this, right? And there are what they call black swan events,
yeah,
events that happen, right? These are massive black swan events. But again, why I like this wealth stabilizer is we have black swan events all the time. A real
yeah,
estate area, maybe it was really good, and then somebody had a bankruptcy right next to you
yeah,
that affects your deal,
yeah,
right? Um, that's a black swan event, right? And so, how do we build some protection around us and not have to put everything on the table on black and say, all right, we're good, and then you lose it all, right?
yeah.
I don't know.
Yeah, you're right, because people will say, they'll project and they'll say, for example, like I can average out, 10% over the long run, even with the losses, I can still come out ahead. But the problem is, check out the book, The Black Swan by Nasib Talib, and you'll learn more about what we mean by black swans. It's that unexpected. It's when something has
Mhm.
a less than 1% chance of happening, but when it does happen, it has greater than a 99% effect on the world, such as COVID. The chances of a worldwide virus slash disease spreading out was probably way less than 1%. But when it did, it changed the whole world. It changed the way we traveled, the way we worked, the way we spoke to
Mhm.
people, everything, the way we interact with our families, our friends. It changed everything. So there are always going to be black swans. Always. We don't know when or what's going to happen, but what if there's a way when the next black swan happens, it won't affect your account balance or your mutual fund or your brokerage account. This is where the power of being on yourself comes in, is that
Yep.
it doesn't really make a difference. Whether I remember when COVID first happened in March 2020, it didn't really make a difference to like our cash value life insurance policies. The only thing I think happened as far as life insurance and changes was they just added an extra requirement. Like if somebody was over the age of 70 years old, they were going to reconsider because of COVID. That was the only thing I noticed, or that
Yep.
was like the
Yep.
only difference, but nothing. They didn't hold back dividends. They didn't lower interest rates or crediting to accounts. They didn't subtract any additional fees because of COVID. Nothing really bad happened.
Yeah. Well, and then a lot of times people discount volatility
Yeah.
and the idea of sequence of returns risks, which is another big term.
Yeah.
That, if you're 68,
Mhm.
about to retire, then you're screwed. That's what happened in 08, right?
Yeah.
And so we might think we're young enough and we can time the market,
Yeah.
like they did when they were younger, but we don't know. And also having a diversified portfolio, meaning truly diversified,
Yeah.
if that were to happen, right? And we needed to take out money for living, right? Take it from your life insurance policy's cash value, and then you're not going to get a double whammy when you need the money to live or whatever.
Mhm.
And I think that's, people are just thinking one way,
Yeah.
and you have to think holistically,
Yeah.
right? And I think that, or they'll people will say, well, these guys are evil, these guys are evil, and it's not a either or. Again,
Yeah.
it's a both and. And how do you take the best and run and use the concepts. I do think we need more stability. We need more access to capital and cash. Banks aren't giving us any return on our investment in savings, right? So this makes sense to me, at least part of your portfolio. I'm not saying all of it, and then you do what you're good at.
Exactly, I agree, because I'm all for trying to strive for bigger things in life, right? For bigger goals. But like you said, truly diversified. Now, you didn't just say diversified, it's a truly diversified, because a lot of people might say, all right, I'm in the stock market, I'm in low risk, medium risk, and high risk. I'm diversified. But all that is still in the stock market.
Yep.
Truly diversified is I have my cash value life insurance policy, I have some stocks, brokerage account, my business, other cash in such account. That's truly diversified. It's like they're not really connected or correlated together.
Yeah, exactly. And I think that's finding the specialists that understand that, and knowing how to ask the right questions, right? Also, when it comes to, and we have our podcast, Wealth Wisdom, financial podcast, it's asking the right questions, right? And not just going and saying, Dave Ramsey said this, and it's one cookie cutter thing. I don't know. Each policy is different. Each person is different. And so how you use it and how you build it, that's a different thing. But asking yourself the right questions, and your answers will change. Like I think I mentioned that before. When you're a new dad, your questions may be the same, but it's going to be a different answer because of circumstances.
Exactly. Yeah. And our time is coming up close to finishing, but I wanted to just kind of elaborate more. Like, financial planning and strategizing is not an over-the-counter product. It's not something you just buy, like that's already packaged for you, and you want to find the best one of those things. And that's how I think people, their mentality is, it's almost like a commodified approach. Like Dave Ramsey said, this thing is the best thing, so I'm going to buy that thing because a lot of other people are buying it. And really, it's not to say that Dave Ramsey's wrong or other people like him are wrong. It's to say that you need a unique strategy. You need to work with somebody who's unbiased and who can ask you open-ended questions, and who can help you build other things other than just one product or one thing.
Yeah. And I think that's the key, and where, listening and being there, and why I love what I do. I won't just say, oh, can you build this policy? Can you do this? I want to ask questions and then see how it fits in there. And I might tell them, don't do it yet. But what most people are doing is just handing it off to somebody else. They don't want to think about it. They'll put their head in the sand until it's too late. And that's what I want your audience and people to hear is, if you don't have a plan for your money, everyone else does. Right. So have a plan, think it through, talk to your wife about it. Don't just like run it by yourself or husband, but like think it through, because this is the most important decision of your life, right? These are so important, and you don't want to wait until you're 60, 70 saying, I wish I would have taken more time, because doing that is going to help you go farther, faster.
Which we've seen, we've seen that we've had people in their 70s come to us and say, all right, what do I do now?
And I want to say, oh, you're screwed, and I can't, but and that's true. Maybe that is you, and you need to start now. Right. But, and I would love to, again, how do you build stability regardless of what happens in the world? I think that this is the best way. I've experienced it personally. And have a plan for your money. I have a plan for when I take loans, how I pay them back, what I'm using it for. It's always emotion. And the problem with the 401k system is it's still always emotion. We just can't access it. It's emotion. It's tied up till we're 59 and a half. It's still emotion. We just can't put it in motion. It's other people that are using it to grow. I don't know. I'd rather have an emotion of my own system than in the big business system.
Exactly. Yeah, I agree. I like, having my own, managing my own money and not having any restrictions on it at all, regardless of age or contribution limits or any of those things like qualified accounts have. But Brandon, it was awesome talking to you
Yeah.
again. It's a pleasure working with you and Amanda. How can listeners connect with you guys?
Yeah, you can find me at the stillmethod.com. That's our new download there to get the Still Method checklist. Go to any podcast thing and look up Wealth Wisdom Financial Podcast. Our business name is Grandma's Wealth Wisdom. So if you want to talk to me directly, go to Grandma's Wealth Wisdom and schedule a meeting.
Awesome, Brandon. Thanks for joining us.
Awesome. Thanks for having me.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.